Hey guys, today I'm talking about 3 stocks that I'm investing into right now. These are 3 stocks that I've researched myself and that I see have huge upside with minimal risk. Not many are buying these stocks right now, so I think they are a bargain right now at this moment. Let me introduce myself. My name is Zino Ross van Tanningen and I help people build their investment portfolio and grow their personal wealth. So if you like this content, please subscribe to this channel, hit that like button and the bell notification so that you know when I bring out new content. Now, this is a disclaimer. In no way or form am I telling you to buy these stocks yourself. This is my personal investment, so I'm talking out of personal experience. All stocks I talk about, I actually put in my own money. So I put my money where my mouth is. And when I buy stocks, I specifically look at one key aspect, and that's their balance sheet. The balance sheet will show us if the company has enough liquidity to survive this market downturn and survive in the long term. Also, in the case of these companies do go bankrupt, they have enough assets to cover my own investment. This doesn't mean that I want these companies to go bankrupt, but that's my margin of safety when I'm investing into these companies. In another video, I explain the 3 key aspects I look at the balance sheet when I'm investing into a company. I'll link that one down in the description. So let's dive right into it and discuss the first stock, and that is Macys. Macys is one of the largest retailers in the world, and they own the largest department store, which is Macys Herald Store in New York. Not only do they own the largest retailers in the world, they also have a massive online presence, which they have been working on since the 2008 crisis. Currently, they are the 2nd largest online retailer for fashion. Next to that is Nordstrom. And Nordstrom at this moment is hugely indebted, whereas Macys has a huge cushion to take a hit in the case of a financial downturn. And don't get me wrong, their short-term debt position does not look very well, but they have enough equity to be able to take on more long-term debt to get more cash into the company overall. And if I look at their current valuation, I think they've dropped massively under the intrinsic value that they are worth. Not only do I think they will survive this crash, I think a lot of their competitors are going to fail because they have too high of a debt position, which means Macys will come out as a winner. Now let's talk about the second company that I'm investing in, and that is Alaska Airlines. Alaska Airlines is the 5th largest airliner in the United States. But most importantly, it's the airline with the most amount of cargo transportation of all US airlines. Next to this, they have a subsidiary called Horizon Airlines, which is the largest short-term flight carrier in the United States, which is a low-cost airliner, which is basically going to be one of the first airliners to be coming up and running again, as they're such as low cost, which is going to be the first thing people are going to start using in an economic downturn. And most importantly is their balance sheet. They have a lot of equity within the company, so they have a long breath to be able to survive this crash. If we take an example of one of their competitors, United Airlines, their position in long-term debt is much better than United Airlines. And now that the government has stepped in to protect this company even more with the $2 trillion stimulus package, this company has enough liquidity to survive this and come out as a winner at the long term. Lastly is the 3rd company that I'm going to be buying, and that is Hyatt Hotels. Hyatt Hotels is one of the largest hotel brands out there, with about 80% of their revenue coming from the United States. The biggest differentiator between Hyatt and its competitors is the large amount of real estate that it owns. And because they've been focused on the long term and been building out their equity for such a long period of time, they're in much better shape than their competitors. Now let's look at one of their competitors, Marriott. Their long-term debt position is looking awful. They have a very high amount of debt towards the equity ratio, and their short-term debt position doesn't look any better. This means when the crisis with Corona has ended, many of the competitors of Hyatt won't be able to keep going with the same amount of hotels that they have currently. This will give them a huge opportunity to grow their market share because they have enough equity to take on more long-term debt to finance this growth after the financial crisis. Now guys, all of these stocks I'm buying with a long-term point of view, so I'm not planning to sell them anytime soon. I'm planning them to keep these stocks between 2 to 10 years long. Keeping in mind the long-term perspective, when you're buying stocks, if you're buying a good company, they will be able to survive economic downturns like this. Now guys, if you like this video, please thumbs up this video, subscribe to the channel, hit the bell's notification for all future content, and of course, if you have any ideas for new videos, please comment below and I'll try to make a subject about that video as well. Thank you for watching. Until next time.